Morning, Steve Reed in Chicago with the morning grain comments. Well, it's Friday. It's been a long week, and hope everybody has a safe weekend. As far as the grain markets are concerned, they're kind of mixed right now. Beans up a little bit, corn unchanged, and wheat still down. Yesterday, the USDA report basically focused on three things. Number one, a lot of people think that they were conservative as far as dropping corn demand. And many people think that lower ethanol numbers, maybe a little bit lower export numbers, could raise the 2021 corn carryout closer to 3.8 billion bushels. That would be negative to prices. And in the beans, I think some people feel that the bean crop is going to get bigger than what the USDA says. And that maybe export numbers may not quite reach USDA numbers, despite the fact that this week's export sales were better than expected. And there was a big announcement of new crop soybean sales to China. And some people are using a carryout closer to maybe 550 for 2021 than the USDA's 405 or 395. And as far as wheat is concerned, still there's too much wheat in the world. And the fact that the USDA raised yesterday's world wheat carryout to a new record high limits the gains in the wheat market. As far as weather is concerned, it's still mostly dry across parts of Russia, Ukraine, Kazakhstan. And again, the market really isn't focused on that as much as it is watching wheat demand globally, and also the fact that stocks are just too high. And also, as far as the weather is concerned, 6 to 10 day here in the U.S. is warm and dry. The 8 to 14 day, though, put rains in most of the Midwest. And so that limits the upside in prices. I think our weather guy still feels, number one, they're bringing the rains in probably a little earlier than he thought. He thought it'd be mostly closer to the end of the month of June than in the 8 to 14 day. He also may be one of the few that thinks that July weather across the Midwest is going to be warm and dry. And so where the ridge establishes itself, if it moves in and out, if it even develops, is the key to prices. Some are saying that the U.S. corn yield may be closer to 180 right now, and it needs to get down to 165 in order for stocks to decline enough to rally prices. And then we had the outside markets, the big sell-off in stocks yesterday. I think stocks are higher overnight because free money is trying to move itself back in to the market. We're still concerned about the Fed chairman's comments about the economy, and we're still concerned about virus cases picking up as we slowly reopen the U.S. economy. So the markets are going to be watching the headlines as far as the economy is concerned. It's going to be watching weather, and it's going to be watching money flow, with the funds now short wheat, short a large amount of corn and soybean meal, and long a few soybean and soybean oil contracts. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.